Gujarat PSU stocks surge after the state announces a new policy for minimum dividend distribution and bonus issues.
Ipca Laboratories continues to correct and trade after the pounding it saw yesterday. This is post the Unichem deal, even as the management says they anticipate revenues of around 1,800 crores from the acquisition over the next 2 years.
MCX slips about 4% after Chief Technology Officer Shashank Sathe resigns. Ongoing concerns, elevated costs from a new software support contract with 63 moons also weigh on the stock.
AU Small Finance Bank dips over 3% in the wake of its quarter 4 numbers. The net interest margins contracts even as deposits grow over 30% in the quarter.
Another stock which is surging after their numbers is Mahindra CIE Auto, up around 5% after strong fourth quarter numbers where the margins have hit a record high. The profits too have risen by 73%.
Hello and welcome to Chartbusters. I'm Nigel D'Souza and joining me is Mangalam Malu. Well, Mangalam, the markets are more or less
flat.
Just pull up the Nifty
chart. Yes.
Pull up the Nifty. It's not moved at all.
If someone hit the snooze button on it's recovered from the lows for all that means, but if someone's hit the snooze button on the alarm, gotten up later, much later after the markets open, and is just rubbing their eyes right now, well, you haven't missed much. Nothing really has happened. The Nifty is absolutely flat, as is the Nifty Bank, as is the mid-cap index, and as is the Sensex.
Just picture only a core Nifty trader, right? One got up at 9:15, one got up at 10:30. Both of them actually at the same point.
Both of them are at the same point. If both of them did nothing, that is. Yeah. If the one who went long, then maybe, may not have made a lot of money, or the one who went short would have made not a lot of money as well. But, either way, what should you do now that, the first hour is gone and nothing much has moved? We have Ashish Kyal with us. Ashish, we've been consolidating. The good part is that the range has moved higher and the consolidation is now happening around 17,800 as against 17,600 and 17,700. So do you think this is a market for positional traders and not intraday traders?
Hey Mangla, morning to you, Nigel, to you as well, and all the viewers. See, the overall trend for the market had been positive. If you look at, we consolidated, we had some retracement of 23.6% about 2-3 days back. From there, again, we had a gap up opening, we sustained there, and now we are consolidating. That's a very good sign. VIX is also below 12 levels, so it shows that there is not kind of anxiety in the market is what we are seeing. And also 17,700 put sellers are getting aggressive, which means that they are not expecting it to go down much further. So 17,700, 17,680 is going to be a very important short-term support. And I'm going to be looking this market positional traders perspective, because in an upward move, we see a range is narrow, you don't get much opportunity, and most of the movement usually happens with a gap. So I think this market is for positional traders. From a positional perspective, I think Nifty is headed above that 18,000 level. So I'm going to be bullish, to be honest. And on the downside, I will stay with bullish view as long as Nifty protects that 17,550 mark. So from the positional perspective, I'm aiming for above 18,000 level as long as 17,550 is intact. But if you are an intraday trader, then if Nifty manages to take out prior day high, which is 17,807, then I think the positive trend is going to resume. So use dips as a buying opportunity. I think this is time to buy stocks as well. And the overall mood for me is going to be on the long side.
Okay, you're maintaining your positive stance, and 18,000 is what you're gunning for. Ashish, what about individual stocks? What are you looking at?
The first stock pick is KPIT Tech. We can clearly see that this stock was consolidating, and what is very interesting is that the relative outperformance. So if you look at KPIT Tech and compare it with the large cap IT space names, you can see such a huge outperformance this stock has shown. And if the IT sector reverses up, then this stock is the first one to lead all the way on the upside. So KPIT Tech is a long call. For the short term, the stop loss can be kept at 850 levels for the target of 950 on the upside. But I'm optimistic, and this stock can even cross about that 1,000 mark. The next stock on the buy side is going to be Taj GVK Hotels. We can clearly see a strong outperformance even in this stock. It has continued to show a very sharp run up. In fact, it has been, I think, nearly around 2 to 3 weeks since it has not closed below the prior day's low even once for consecutive 2 weeks or nearly 14 trading sessions. And that shows the strength in this stock. So Taj GVK Hotels, one can create long positions. Stop loss can be maintained at 215 for the target of around 240 level.
All right, will be interesting to see how that one pans out. Trends for hospitality have been extremely strong, and we have Indian Hotels numbers tomorrow as well. Ashish, always a pleasure speaking with you. With that, we move on and shift focus to our special segment, where we get you a few ideas for profit, as always, from our colleagues at Money Control Pro. And today we have Khushbu Gupta with us. Khushbu.
Good morning and thank you for having me. Triveni Engineering and Industry Limited is one of the largest sugar producers in North India and also runs an engineering business. The company is a leading player in the niche high-speed gear segment. We prefer Triveni over other sugar stocks for its continuous focus towards forward integration and also presence in the high-margin power transmission business. To meet the current emerging demand for ethanol and expand overall margins, the company is planning to double its ethanol capacity to 1100 kiloliters per day by FY24. On the earnings front, the company posted satisfactory performance and a strong order book in the engineering division in the 9-month period ended December 2022. This was supported by a marked uptick in the economy and higher capex by key industries. Also, the company is a major supplier for multiple indigenous products in the defense sector, which could be a major growth driver for the company going forward. The stock is trading at 10 times FY24 PE and appears to be reasonably priced on account of strong earnings visibility and higher return on equity. We believe Triveni could be a key beneficiary of the improving sugar industry fundamentals and growing industrial activity, and the stocks offers value for long-term investors and could be added.
All right, so that's the word coming in on a stock that Khushbu has been tracking. Just before we slip into a short break, keep an eye on a couple of stocks. Lemon Tree Hotels has moved to the high point of trade, so hospitality doing extremely well. We had Taj GVK as one of the picks by Ashish as well, and Indian Hotels reports numbers tomorrow. So Lemon Tree Hotels comes up for you on the screen, up almost 8%. And alongside that, Tata Consumer, that's the other one. Good results reported. Before that, there was a fair amount of pre-positioning. The stock opened in the red, but now has recovered from the lows and currently moved mildly into the green. We take a short break and continue our hospitality discussion. We have with us the management of Mahindra Holidays. Kavinder Singh, who's the MD and CEO, joins in.
When our big boss was MD, he used to take care of us.
And our Prince Sahab is busy ensuring his family. Oh, big boss, you?
He's busy obtaining term insurance for his family. After all, office is also our family, am I right?
Let's close the deal.
Thank you.
Verma ji, will you have tea with this prince?
LIC's Group Term Assurance Plan takes care of your office family.
What if buildings could tell you how they could be more efficient?
I'm listening.
Well, with IBM, you can use software to help you connect and analyze data from heating and cooling to elevators to lights.
What if we use AI-driven insights to pinpoint inefficiency?
Yep, and act on it. Saving energy, money.
And emissions.
Yep, that's a big one. Now you've built something better for everyone. That's the sustainability solution IBM and a global real estate company created. What will you create? IBM, let's create.
A. Balasubramanian decodes the investment space for retail investors and draws out the do's and don'ts on how to grow wealth by goal-based investing through mutual funds. Watch all this and more on Mutual Funds Sahi Hai. Give wings to your savings in association with News 18 Network at these times.
AC gone.
Blue Star on.
Blue Star Fast Cool Inverter AC with voice command. Bye-bye heat. Blue Star.
जब आप अपने जिगर के टुकड़े को हवा में उछालते हैं तो घबराते नहीं हैं क्योंकि उनको पूरा भरोसा है कि आप उन्हें संभाल लेंगे। उसी प्रकार 2.5 लाख से भी अधिक लोग रोजाना मुथूट फाइनेंस पे भरोसा करते हैं। मुथूट फाइनेंस गोल्ड लोन खोलिए खुशियों की तिजोरी। आज ही कॉल कीजिए 1-800-313-1212।
Whenever I had ice cream or cold water, I would experience a sharp shooting sensation. So I just kept ignoring it. Even my hot chai was giving me the same amount of discomfort. My dentist recommended Sensodyne. So now I can be completely carefree and sip my hot cup of tea. It really works.
Welcome back. Well, while the frontline indices are absolutely flat, a bunch is happening in a clutch of these small cap cash stocks as well. So while we spoke about Lemon Tree Hotels earlier, just keep an eye out on other hotel companies as well. Kamath Hotels up 5%. We have Kopran up around 4%. These aren't stocks that we usually speak about, but there is some buzz here as well. Astra Micro, the defense play out there, up almost 8% as well. Amidst all of this, let's talk hospitality itself. Our guest on the show today is Mahindra Holidays and Resorts. Posted a strong set in the fourth quarter, and it was led, of course, by the turnaround in their European business. Kavinder Singh, who's the managing director and CEO of the company, joins in. Kavinder, always a pleasure speaking with you. And over the last few conversations we've had, you have said that, European business will turn around in the fourth quarter because it's a seasonally strong quarter for them. And turnaround it has. It's posted an EBIT of close to 50 odd crore rupees versus a loss of 16 crores in the quarter. What I wanted to know is, what's a sustainable number here? In a strong seasonal quarter, you've done an EBIT of 50 crores and revenues of close to around 400 crores. Going forward, what's the quarterly run rate we should expect here?
You're right. The Holiday Club Resorts has indeed turned around. And, Q4 is typically a seasonally strong quarter. But in this case, the Finnish operations surprised themselves because the Britishers, Germans, Dutch, they all came for the skiing in the Lapland season, Lapland area of Finland. And this time, we saw a big movement in timeshare sales growth by 57%. Spa hotels grew by about 19%. And in the quarter, they delivered an EBITDA of 6.4 million euro. Now, this is an extremely strong performance, considering the fact that there is a war going on in Russia, Ukraine, considering the fact that the inflation is high in Finland, and considering the fact that the consumer sentiment has been low. However, the silver lining here is that the timeshare sales in Finland are doing well because the Finnish love second homes and they are not in a position to buy second homes because of the higher interest rates. So we see good times ahead for Finland because structurally they have reduced their costs. Looking forward, which is your core question, actually speaking, Q2 and Q4 are seasonally high quarters. Q1 and Q3 are not very seasonally, they are not seasonal quarters, if I may use the word. But structurally, we see significant changes that have been done in the Holiday Club Resort operations, which we will begin to see the results. And I'm pretty confident that the full year performance of Holiday Club Resorts is going to be significantly better than what we have delivered this year. So there is the turnaround which has started, and it is quite visible to all of us.
All right. Hi, Mr. Singh. Good morning. Thanks so much for joining. And well, your occupancy, I think, for the past quarter was in the vicinity of around 84%. So could you tell us what's the number you're looking at going ahead? That's point number one. And member additions, what's the target? Where do you end FY24 at?
All right. So the good part is that this occupancy that we delivered on 84% is on the back of about 1,200 rooms that we added over the last 2.5 years. So we have been brisker in our room additions. We are closing the quarter at the year at 4,940 rooms. And despite that, the occupancy was 84%. As we keep moving ahead, the rooms will keep coming in. And we are looking at April, May, June occupancies upwards of 85%. The business on books is very, very strong. As far as the FY24 member additions are concerned, you have already seen that we have crossed the 5,000 mark in the quarter four. Quarter four is generally a good, quarter for member additions. Of course, we still grew by about 25% over the quarter four of last year. We are looking at good times ahead from the point of view of the fact that we have made significant progress in our channels of acquisitions, whether it is digital, whether it is referrals, whether it is on-site sales, and our focus on tier 2 and tier 3 towns, as well as corporate sales. So I think the member additions are going to be robust as we move forward in the near future.
All right. Just wanted some color on your member additions itself. 5,100 members you added in the fourth quarter. How much of that was, renewal? What was the renewal rate on that? What was the membership breakup across tiers? You have a lower tier, mid-tier, premium membership, etc. as well. And what proportion of members currently come up for renewal in the next 4 quarters?
All right. In our business, as you know that we are different from traditional hospitality business. We have about 282,000 members. So in our case, every year the annual fee becomes due. And different members, since they join at different periods of time, their annual fee becomes due at different points of time. So in terms of, we do not use the word renewal. We do see how many people are paying us the annual fee. Obviously, because you've seen the annual ASF income, which is also grown at a year level by about 17-18%. So we are seeing momentum in the annual fee collections as well. If I were to look at the overall numbers that we have delivered and the breakup there, the annual average unit realization, you may have noticed, has already gone up to 4.2 lakhs versus 3.4 last year, which means the mix is moving towards higher and middle tenure memberships. Of course, we do target millennials through the lower tenure memberships. So this average unit realization also includes a very significant momentum that we got in upgrades, which has gone up by 71%.
Right. Another couple of things that I wanted to ask, while your room to member ratio improved from 58 to 57, there's an important mark going ahead as well, because members who join should get rooms. I mean, that's the biggest grouse that a lot of members have in Mahindra Holidays, and which is what explains the kind of occupancies that you have as well. What is your target here? At what level will you be satisfied? I mean, is it 60, 65, 70, or are you looking at a much lower number, say 35, 40? Just wanted to understand that.
The way to look at the overall rooms that we have now about 5,000, roughly 4,940 rooms. We have 282,000 members, and when we do a simple member to room ratio, you'll notice that it has become better at 57. And, despite that, our occupancies were 84%, which means rooms are available at any given point of time to all the members. Yes, sometimes the rooms may not be available in a particular resort, in a particular date, and you may not be even eligible because you may not even be coming in your season. So at an overall level, what we track is that do we have sufficient inventory to satisfy our member demand, which is rising. And I think 84% occupancy gives us significant headroom, considering that we now have 4,940 rooms. And we believe that the way we have actually used the power of digital and analytics, and the moment a member comes into the website, there is always availability shown that what is available in the next 15 days, 30 days, and 45 days. So there is a significant, and coming back to the sweet spot, I think we are already in the sweet spot. We used to be at once upon a time at 69:1, which was bad in my view, because that creates lesser opportunities for members to get the bookings. And now we are at 57. Everybody doesn't holiday at the same time, and they don't holiday every year because they do try to sort of bunch together sometimes. So I think we are already in a very, very good spot in terms of member to room ratio.
Okay, all right. Mr. Singh, also if you could tell us India margins. You told us on the European business for the year you're expecting to be steady, and you gave us reasonings why Q4 is very good. But what about the India business? What kind of sustainable margins we're looking at?
So I think as far as the margins go, in our business, there are two things that we must keep in mind. When we drive customer acquisition, that our revenue gets pushed into the future. By the way, we added 144 crores to the deferred revenue for the full year basis, which means we pulled out lesser and we put in more, which is by about 244 crores. So our deferred revenue is growing, which means our balance sheet is getting stronger, which means more income in the future, more profits in the future. But however, what it does is that when you are going after the member additions, you could see lower profits or lower margins because your cost is loaded up front, but the revenue gets pushed into the future. But the other area where we do see sometimes, and this I'm talking about the PBT margin level, not at the EBITDA margin level, where when we accelerate our inventory additions, you do see the depreciation and financing costs coming in little ahead of the time when the occupancy comes in. So if you really look at from these two balancing factors, I think we have done a very decent job in terms of margins. If you look at versus pre-pandemic levels, we are up by about 430 basis points on the EBITDA and PBT level. So that's quite a healthy movement upwards. Of course, if you look at pandemic, our margins were higher because the activity levels were low and income was coming in. So looking forward, I'm very confident of improving the margins even further.
So roughly 13 to 14% in India business is sustainable?
You're talking about the PBT margins, which are about 14.
The EBIT margins that you've reported, yeah, which have fallen to 11.8% right now.
Yeah, that happens, as I mentioned, in Q4 when we chase higher member additions and when we look at the inventory that came in, and that leads to a temporary dip in the margins. But I'm very confident of returning back to the 13-14% margin that you alluded to.
All right, and finally, this year you crossed the 20,000 members per year mark, right?
We are aiming to get there.
Sorry, say that again?
As I said, we are aiming to get there.
All right, okay. Thank you so much, Mr. Singh, for joining in and giving us the outlook on the future going ahead. Wish you good luck. With that, we'll step into a short break, come back, get you more on the markets and individual stocks.
Yes. Quiet! It's okay for us to nod for everything, because we are parrots. But your wealth manager? Shouldn't be doing that. You know? No? Oh.
Choose Nuvama. We only do what's right for you and your money. Nuvama. Let's do it right.
Let's you and me step out and see how blue the sky, how tall the trees. Cause forever.
Skoda brings you Kushaq and Slavia, India's safest family cars.
A. Balasubramanian decodes the investment space for retail investors and draws out the do's and don'ts on how to grow wealth by goal-based investing through mutual funds. Watch all this and more on Mutual Funds Sahi Hai. Give wings to your savings in association with News 18 Network at these times.
Z-Block Premium Agarbatti and Dhoop, official prayer partner, Delhi Capitals.
While a general has the power to cool, even in the hottest summers, its sustainable technologies help fight climate change and protect our planet. General, the extreme machine.
That's the boss's cabin. The canteen is behind. Morning, ma'am. Morning. And you are here. Good morning. Good morning.
मैम और कोई ऑप्शंस
लाइफ में और कहीं ऑप्शंस मिले ना मिले, मोतीलाल ओसवाल आपको देता है ऑप्शंस ट्रेडिंग में ऑप्शंस। इंट्रोड्यूसिंग मोतीलाल ओसवाल ऑप्शन स्टोर विद अ वाइड रेंज ऑफ ऑप्शंस इन ऑप्शंस ट्रेडिंग। एक्सप्लोर करो ऑप्शन स्टोर। Investment in securities market is subject to market risks. Read all the related documents carefully before investing.
Welcome back. Let's focus on a couple of earnings reactions. AU Small Finance Bank, where it opened up in the green, but it's down close to 3% as we speak. Abhishek joins us to tell us what's dragging the stock performance today. Abhishek.
Well, Nigel, AU Small Finance Bank, for them, the net interest margin compressed in Q4 FY23. And the management has guided the fact that, it will remain compressed or decline in the coming quarters as well, or for FY24 when compared to FY23 numbers. So the net interest margin for Q4 is at 6.1%. This compares to 6.3% on a YY basis and about 6.2% on a sequential basis. The operating profit growth rate has also compressed on account account of the compression seen in NII growth. So operating profit growth is at 2.7% quarter-on-quarter in Q4. This compares to 11.4% quarter-on-quarter growth that they had in Q3 FY23. Cost to income ratio has remained elevated. It's increased to 63.1% when compared to 61.6% in the previous quarter. A tax rate has been lower this time around, which has actually aided the PAT momentum. So gross NPA ratio, that's declined to 1.66% when compared to 1.81% in the previous quarter, and even the restructured book has actually declined on a sequential basis. So in terms of P&L, the NII and PAT is a beat on our poll. However, we have a downgrade coming in from Nomura, who have downgraded the stock to neutral from buy. They have cut the target price to 630 from 725 that they had earlier. They say that the ROA will moderate going ahead, and headwinds are there to near-term return profile of the bank. Hence, they do not see they see multiple challenges to AU sustaining these return metrics in the near to medium term. Back to you.
All right, Abhishek, thanks a lot for that. That's about AU Small Finance. We started the show when the front line indices are absolutely flat. They're still flat, but now below the red line. And the Nifty Bank actually has taken a turn for the worse. It's down about 120 points. With that, we wrap up on this edition of Chartbusters. From Nigel, me, the entire team, thank you for watching. Trading Hour comes up next.